Powerful ideas sometimes grow from even modest beginnings.
Well, good morning, Bob.
Good morning, Bill.
It's a bright and cheery Monday morning, and a lot of things are going on in the world. We have many things going on. We have interest rates year over year down, and Rhode Island has got unemployment way high. And you know what? It's a pretty state. It's absolutely gorgeous. It's on the ocean. It's gorgeous.
Just not good a place to work right now.
Well, there must be no jobs. It must be. I wonder why there are no jobs in Rhode Island.
I don't know. It's a pretty state.
It's a beautiful state. It's absolutely gorgeous, and I mean, I believe it was the home of the first America's Cup.
Oh.
And so it draws money.
The good news is that unemployment rates keep going down, and across the country, all the states are now below 8%, except Rhode Island.
Now let's talk about unemployment for a second. Is unemployment going down because people are not looking for work, they've left the labor force, or is it going down because there are more jobs, or both?
There are more jobs, but the jobs creation is only slightly above the job applicants.
And the other question is, are they low-paying jobs? Or are they high-quality jobs?
Well, it's a mixture, obviously, but unfortunately, there are too many people who are working subpar right now.
Well, let me see if I can paint this picture. Rates are going down. Mm-hmm. We're seeing some appreciation, although it's stabilized, some appreciation in housing. You would think, based on those criteria, that we would have more applications, and yet applications are going down.
Well, applications went down last week. They were way up the week before.
House prices, inflation's going up. We're seeing some return to consumer inflation.
Yeah, it's funny. Wall Street Journal is still singing the same song last week. The CPI core index went up and took a big jump. It's almost up.
How much of that was energy, though? A lot of it was energy.
A lot of it was energy, although, the impact from the Iraqi crisis has not really been felt yet.
We've seen 5% increases in gasoline prices.
Gasoline has gone
up. And, Americans like to drive.
They do, particularly in the summer.
Particularly in the summer, and so that costs more money. What are we to make of all this? I mean, we're seeing rates down year over year. We're seeing inflation, and you would think people's expectations about the future price of houses with inflation would be positive. I need to buy now.
Yeah, there are a lot of factors. I wish it was real simple, but there's so many different things going on in different directions right now. If you go back, last Friday was the last day of spring. Okay, summer now, Bill. And
it feels like summer. I got out and ran this morning. It was 73 degrees out at 5:30. It's
about 90% humidity.
About 95% humidity.
Yeah. So last year, on the last day of spring, the interest rate for mortgages, I'm using the Freddie 30-year fix,
right,
was 4.29 and climbing.
It's 4.22, roughly 4.22 now.
Well, on Friday it was 4.18, dropping from 4.20, and the expectation is it's going to continue to drop. So a year ago it was 11 basis points higher and climbing.
Expectation was going up,
and now it's 4.18.
Expectations going down, and still much less. I mean, it's dropped way down in terms of demand. Demand's way down for mortgage.
Yeah, and the affordability is improved, and they just came out with the most recent report on the household debt service ratio. In other words, how much debt do people have to support, and
it was low, like way down.
All-time record low, and even in mortgage, there's several components of it, but the mortgage component was real close to a 30-year low.
So the financial indicators are all very positive. I feel a hint of psychology in the marketplace.
Well, I think people are still very nervous about what's going to happen in the future.
Even though the financials that you just talked about don't bear that out. Not historically.
Yeah, and a lot of it is, even the big banks are still concerned. I saw that Wells Fargo just laid off another 250 people. That's on top of 3,000 that they've already laid off in the mortgage industry.
So people are nervous about their job.
They're nervous about their jobs. They're worried about the future. I saw the Wall Street Journal came out again, repeating the same song they've been doing for 6 years.
Inflation's going up.
Worried about interest rates. I mean, not interest, inflation.
Inflation's going up.
So I don't know. I mean, you're right. It's probably a psychology thing that people are just.
The financials don't bear that out.
Things are looking pretty good right now in terms of the way the market's coming up.
And in a relative sense, that's why we're seeing treasuries, prices of those treasuries way up, yields way down,
Yeah.
because Europe's in a mess.
You know, Janet Yellen came out after this last meeting and said, look, I know that the employment rate is coming down, inflation's stable, maybe going up just a little bit, but she doesn't feel like those numbers accurately reflect what's going on in the economy. She said that she feels like unemployment is actually much higher than the numbers say. And
But that would be imply that there are many people that have left the workforce, or they're
Right.
discouraged, and they have a substandard job and they're not looking.
Right, and they haven't, people haven't come back in yet because they're not the jobs. And the second thing is she felt that inflation is just not an issue right now. The economy is way too weak. And so she's thinking it's going to stay flat for a long time.
And so the implication that I draw from that is the inflation that we're seeing tends to be cyclical in nature, probably from energy prices.
Well, there are a lot of issues. Even if you look at the core inflation, which gets rid of the food and the energy, it went up a little bit this last time, but there is some variation in that. I mean, things are not smooth adjustments, so they'll be flat for a while, then they'll make an adjustment, and then it'll be flat for a while. So,
What impact, we had some new members of the Fed confirmed, what impact do you think that had on the Fed's discussions?
well, in looking at the conversation, she didn't really see much difference in terms of direction. I mean, I think that they're probably going to be somewhat cautious as they take their positions and sort of get the feel of the place. And even though they are some economists and they tend to be a little opinionated,
You just don't know which side they're opinionated on.
I think it'll be a little while before they're really felt,
Before their impact is felt.
Exactly, yeah.
I think she probably has that thing under control.
I think so. She's a smart lady. And
In fact, Alan Greenspan said when he wanted to understand something, he just turned to Janet Yellen and explained it to
exactly.
her.
I don't think he listened very well sometimes.
well, he may not, just because she explained it to him does not mean he absorbed it.
Oh, yeah, that's true. Yeah.
I mean,
Well, I don't know. I mean, you've got to feel like the economy is going to start improving, and you've got to feel that housing at some point is going to start ratcheting up.
How much, I read a report a few days ago, how much of this is psychological? Here's the psychology I'm talking about. In prior recessions we'd go down and snap back, go down, snap back, down quickly and snap back, relatively speaking,
Yeah.
down quickly and snap back. This time it appears slow.
Oh,
So
it's very slow, yeah.
how psychological is a slow recovery versus a snapback?
Well, I'm not sure that anybody knows, but
Because it's very unusual for us to have a slow recovery.
right, and
Housing usually leads us in and leads us out.
Exactly.
And that's not the case this time.
it's been very different this time, and there just hasn't been the spending to reactivate the market. And part of it is a political state that we're in right now, where there's this strong anti-government bias against the government spending for anything to help the economy.
But the snapback, though, if it's snapped back, you would say we're all good again,
Yeah,
right? And if it's slow coming back, you say, well, I'm not sure we're out of this.
that's true. And there have been a lot of people in the press that are warning, oh, we're going to have another recession, and as long as people are out there beating that drum, people are cautious. But again, the housing thing has always driven the recoveries, and housing is the problem this time, and so there's not that energy to change things and move them around and get things
It always helped. People said they started feeling good. They said, I'm going to go buy me a new house.
buy a new house and sell my old one,
Exactly.
and not worry about having to sell it. It's a big load to try and get rid of that existing house and try to get a new one.
And that we haven't seen that this time.
Absolutely have not.
So you think they're on hold until 16?
I think it'll be late 15 or early 16.
Oh,
unless
like I
something-
promise you want to hedge.
What? Well, of course. I mean,
Well, okay, so late 15, early 16, you heard it here, folks. A little crawfishing. This is FNC's Morning View. We're out of time. We hope you have a fantastic week. I'm Bill Ray with Bob Dorsey. Goodbye, Bob.
Bye.
Powerful ideas sometimes grow from even modest beginnings.